Well, good morning, everyone. Welcome to our Tuesday morning trading session. Hang on here a second while I get the screen share going. So, a rather soft start to the day this morning. This, of course, the DTS system, for those of you new in the trading room this morning, welcome. Please feel free to ask questions or request markets. We've got the Hawk Scalper here on the top left, Falcon Swing Trader top right, Eagle Trend Trader bottom left, and the Raptor on the bottom right. You can see pretty quiet overnight market here in the NASDAQ as we saw the market rally a little bit after the close. So we ended up closing down here around 48.04, 48.03, give or take. A little bit of a rally up. Market turned on itself, came back down, and we're opening more or less in the same area where we left off yesterday. It looks to me like this market's in a little bit of a sideways mode, so we're going to give it a few minutes here to see which way they want to trade. The thing when the market is moving sideways is we establish a little bit of a trading range like this, and what happens is traders tend to buy down here, say in the bottom quarter or third of the market, and they sell up here. The middle is kind of no man's land, and you can see that's evidenced by the yellow bars here on the Raptor, which tend to be fairly neutral. And yes, of course, thank you, Mr. Buckaloo, we got a Fed day today. So that's going to put a nix in the wrinkle, as my wife likes to say. So it should be probably another sideways trading session. We'll see what gives. So once we've established that the market is in a trading range, very often the best thing for us to do is to allow it to break out and prove that it can stay outside of this trading range and generate a sell signal or a buy signal on a breakout higher. I know it's boring, but you don't want to get caught on one of these. You don't want to get caught on a breakout only to have the market move against you. That's some excitement that I could live without. So we actually, I guess the cloud crossover signal came back here. You could see this as a cloud crossover as well. I don't know, the market's all jumbled up here on the Raptor. The trading band is pretty much twisted up like a rope, so I wouldn't get too excited about getting short on the market just yet. If we saw another bounce out of the cloud here, that would give us our double pullback signal. That might be something we could take a poke at. So yesterday the big numbers were 4810, which is near the top end of this trading range, and 4800, which is obviously the bottom end of the range where we're at right now. So we've got a first micro macro cross, we've got a first micro macro cross signal lower. And of course, this is a high probability signal. If you wanted to be a little bit more cautious, however, you could short it below the low, that little swing low. That shows us where the buyers are currently hiding. So as a seller, we would certainly like to overwhelm the buyers. Stop should go at least 2 swings back. So there's swing 1. That would be swing 2. That would give you a little bit of staying power. And I'm not entirely sure I would go in for the full risk amount at this point. It might be more prudent just to throw a single on there and end up risking half the amount. So this is one of these let's dip our toe in the water kind of trades. Now, the danger with entering late like this is that we're going to be demanding a little bit more out of the market in order to find our profit target. But it is the first trade of the day, and it's a single contract. So what I'm going to attempt to do is I'm going to attempt to run this out. Alright, well, they're thinking about it. You can see, had I entered on target, we would be, or pardon me, on the hash mark, we would be at our profit objective already. But as I said, it's a single, so I'm going to try to be brave here, try to run this out a little bit, see if we can't catch some early market momentum. Maybe, kinda, sorta. You see, there was the first micro macro cross. So there we are, we're at our profit target. Maybe the market will be hung over from all that Halloween candy. Traders will be bouncing off the walls this morning. Well, we got a bit of a bearish flavor, but come on, let's see some follow through already. Come on, take out that low. So here on our support and resistance lines, you can see we're below the median line, took a bounce off of it during the overnight, skewered by the session this morning. All right, here we go. Now we're getting below it. Where's the next stop? 47.90 quarter, and below that 47.78 quarter. Okay, looks like we're near yesterday's lows now. The market took a bounce off the primary support line. All right, I'm going to take this trade to break even. And with a little bit of luck, we'll ride out this immediate swing. There we go. Come on, keep pushing. So here we are now at that first support line that we're looking at. Second one a little bit lower, 47.90. I guess I could have gone in with my full risk amount. Parabolics being slightly more aggressive here. We'll see if we can't, if we end up pressing a little bit lower, I'll move into the parabolic mode. Come on. Oh, come on. They're trying so hard. There we go. All right, so I'm going to switch now to parabolics. And this reaction that we're seeing now is probably due to yesterday's lows. A little bit of a hiccup. All right, well, there we go. That was not a bad start to the day. You can see we had corresponding signals. Here on the Eagle, we had our trend change signal. Did we find our profit objective there? Oh dear, so close. Just came up a tick or two short of our profit target. Certainly deep enough to hit our break even, and certainly deep enough that you may even want to be a little bit more aggressive on those stops. here on the Falcon, we had our trend change signal. That came in actually a little bit after our hawk signal. You did have a pseudo late filter entry signal here. The late filter entry was spoiled by the single bar. And as you become more comfortable trading the late filter entry signals, you're going to encounter these times where the bar may go out of sync, pardon me, your trend line may go out of sync for a single bar. I guess, and technically this is 2 bars. But you may still judge it a valid signal just by the structure of the market, perhaps by the information from your other tools. Certainly this one, I would not let just this single bar invalidate the late filter entry / trend change signal that's occurring at this time. Because what's happened is this bar right here probably traded 1 tick too high. It probably just went 1 tick too high, and that was enough to change the trend line color for the 1 bar, and then of course it came right back and completed the signal. If your trend change signal is out of sync for 3 or 4 or 5 bars, it is no longer a late filter entry signal. Even though, in this case, it did work out, if this was developing real time, I would not be looking to buy that based on a late filter entry. All right, so even this one here is sketchy. It's out of sync for 3 or 4 bars. That's too long. Even though it did work out, I would not trust that with the same confidence that I would with a regular trend change signal or late filter entry. See, because those that I showed you that worked out, look at these here that don't. If you allow too much time between them, what ends up happening is you end up getting caught in the sideways market. Which is what the breakup in the trend line and the filter actually shows you. Shows you a market that's conflicted and moving sideways. And then here on the Raptor, we had our cloud crossover or double pullback. However you want to envision this, it's the same. The signals are overlapping, and then we get the nice move lower from there as well. So we'll see if they get down here now to actually find the profit target, which was a couple ticks below here, 47.92. I suspect they will. It does seem to be kind of a bearish day today, or at least to start. There they go. So we had another signal develop while we were looking at those other markets. We had this macro pullback signal print. And that too has found its profit objective. So a couple high probability signals this morning, giving us a couple of good opportunities. Good, picked up 4 points on that. And here we go with the eagle trade now. Should have hit our high probability target. And here we are on the breakout and down at the support line. So we ended up moving 2 full zones, which is what we would anticipate. And now we got a little bit of buying coming back into the market. Great question from Ron. Ron asks, do you see value in watching markets that are correlated to help increase the probabilities of trades? Yes, I do. Now, let me add a little caveat with that. Whenever you add anything to your trading system, whether it be, a new shiny indicator or correlated markets or whatever, the only reason you should be adding that is because it helps you make a decision. If it does not help you make a decision, if it only clouds the decision-making process, you should get rid of it. Because believe it or not, right or wrong is not as important as being able to make a decision. Now I know that doesn't seem to make sense on the surface, but what ends up happening is you end up getting so much stuff on your chart that when you do get a signal, you get caught flat-footed and you can't make a decision, and the market, moves along without you, and you're left scratching your head or throwing your office lamp across the room or whatever the case may be. So even if, the trade did not work out, at least you were able to make a decision on the signal. That's the important part. Okay, so now back to your question. Correlated markets, yes, is helpful. In fact, some of you will remember me referring to the late Marshall Jones, who actually developed a trading system by watching the NASDAQ and the YM and then trading the E-mini accordingly. And Marsh actually never even watched the charts. He would watch the bid and ask. He would watch the order flow. And if he saw a lot of orders going through in one direction on the NASDAQ and the Dow, he knew he had a couple of seconds to punch an order into the E-mini, and the E-mini would play catch-up. That was his entire trading system. And it worked pretty well for him. And quite literally, he just watched the order flow. And he wasn't looking for block orders or anything like that. If you know, somebody's getting excited here thinking, oh, I should be watching order flow, you don't need to worry about it that much. In fact, his quote screen is no longer in existence. I forget exactly which service he used, but you can't even find the data the way that he was reading it before, but that's beside the point. Another way to watch correlated markets is with the stock market. I always used to watch crude oil and the bonds, because the stock market used to have a good correlation with the crude oil market. If crude oil was up, the stock market would be up. If crude oil was down, the stock market would be down. And there were, arguments why that would be so. That correlation is not as strong as it used to be. But, you can certainly watch crude oil, and if you see, like this morning, here's crude oil on a little bit of a decline. Albeit the crude oil decline seemed to come after the decline in the NASDAQ. So maybe now the correlation has flipped, that the stock market is leading the crude oil market. But there's another one for you. And then the bond market. They say the bond traders are the smartest traders in the world and the most difficult to fool. Therefore, if you see something happening in the stock market and it's not supported by what's going on in the bond market, the move will probably not last. The stock market and the bond market tend to have an inverse relationship, which means if the bond market is going down, the stock market should be going up, and vice versa. So here's the bond market now on the hawk, and you can see out of the open, it's very, very quiet. So 640, here is the opening bar, so we're only about 3 bars back, and we don't have that inverse relationship, do we? We have the bond market actually in sync with the stock market, which is not normally what happens. Actually, when you're trading the bond market, you may need to dial down the settings even more and go to a 244, because the bonds, you can see, a little bit quiet. Oh, well, this day was fairly active. But a lot of times you're going to get a lot of sessions, that look like this, where you're just not getting any trading opportunities throughout the day. So that's another one you can keep an eye on. Right now it looks like the bonds are trying to tick higher, which should put pressure on the stock market to move lower. But is that what's happening? No, the stock market is moving higher. So correlations do exist, but they're not always accurate. For you folks that like to follow the grain markets, the oat and wheat markets tend to lead. Certainly the oat market tends to lead what's going on in the grains, but not always what's going on in soybeans. So there you go, there's another one. Here's another little trick that you can do. Well, it's not a trick. People sometimes ask me, Eric, can I watch other time frames? Sure you can. So let's just do a basic, I don't know, look at a basic 5-minute chart on the NASDAQ. Okay, so here's your 5-minute NASDAQ chart. Oh, let's change the data here. Let's go to regular futures session. 5 days should make that 10. Okay. All right, so, oops, I need a daybreak line. All right. Okay, so here's a basic 5-minute chart. Well, why would we watch a 5-minute chart when we have mean wrinkle bars? Well, while the 5-minute chart may not be as trader friendly as the mean wrinkle bar, you can get some interesting information off the 5-minute chart, especially these large lopsided bars. Right? These bars show you a whole lot of momentum. After all, this bar printed in 5 minutes. This bar printed in 5 minutes. That's a lot of trading. That's a lot of range. Okay, so why is that important? Well, when you get big momentum to the downside and very little follow through, followed by big momentum to the upside, you may start thinking, well, maybe there's some bullishness to this market. And it took about a half an hour to sort itself out, but there was the next bullish rally. Look at what's going on this morning. That's a fairly big bear bar, fairly big bear bar, fairly big bear bar. But look at, we're starting to slow again, right? If this turns out to be a fairly big bull bar, then we might think, all right, well, let's start looking at some buy signals. So that's something else you can do to correlate. It's not exactly correlating across markets, but it's a little bit of added information, a different point of view, if you will. And it's not that you need to look at trading the 5-minute chart, but sometimes the biggest struggle we have as traders, well, the biggest struggle we have as traders, not sometimes, the biggest struggle we have as traders is determining what side of the market we want to be on. Is the market bearish or is the market bullish? And we normally do that by focusing on the high probability signals. Right? If we've got a high probability setup, we're going to be looking to take that trade. Like for instance, here we go with the hawk again. We're getting another first micro-macro cross trade. And again, I'm just going to go in with a single. We're at the lows of the day. Hash mark's going to print right there. I'll take it below the lows. We'll go back a couple of swings. Here's that 4,800 area. And if the market recovers here, well then maybe we'll see it press a little bit lower. Mike Filigera, I know, likes to watch fast stochastics. He's the only guy I know who watches fast stochastics. But for him, it's something that helps him make a decision. So again, that's the ultimate criteria. Does it help you make a decision? Paul asks, Eric, what's your experience trading the Russell, the TF? Um, it's a good market. It's a lot of traders consider it to be one of the purest stock markets because it seems to appeal to professionals. I don't follow it anymore because my data provider doesn't include it in my bundle and I'm too cheap to pay for another data feed. The mid cap is a very close cousin to the Russell. The symbol for the mid cap is the EMD, and I'll pull that up here for you. The thing that I have with the Russell is the same as the E-mini S&P. The tick value is greater. I get a little bit more flexibility trading the mini Dow or the NASDAQ. So the mid cap is also $10 a tick, just like the Russell. And if you're looking at the Russell on the Hawk, this is going to be pretty much a direct overlay of what's going on in the Russell. You can see there's good follow through. The Russell will look very similar to what you're seeing here. So the signals tend to be less frequent, but again, the follow through seems to be pretty good. Here's the Dow, or the Dow, the Falcon on the mid cap, and we got a nice trend change signal or alternative late filter entry here out of the open, however you want to envision that, and again a good follow through lower. Working a trend line touch signal here at the moment, looking to see if the market's going to fall off. Each market has its own characteristics, however. In the mid cap, let's see if I can find you an example, especially on the Hawk. These red bar buys and green bar sells, which tend to be a little weaker, say on the NASDAQ or the mini Dow, tend to have some exceptional follow through on the mid cap. And by association, I would probably venture a guess they do the same on the Russell. So here's a green bar sell, and you can see that was just the start of this rather large trend lower. See if I can find you a red bar buy. They're not going to show me one, but most times this would have dipped a little bit lower, it would have been a red bar buy, and then boom, the market just explodes like that. And even mid-trend, you'll see the market dip down, produce a red bar buy, and then go on for another 20 points. So, yeah, it's a great market, but like I said, I didn't see much point in subscribing to another data feed for as often as I actually look at it. Your market mix is important. Most people don't give a whole lot of consideration to their market mix. They trade whatever seems to be popular, right? Crude oil traders are like that. I'm not knocking you guys that are trading crude oil. It's a fine market. But have you really considered why you're trading crude oil? Are you just trading crude oil because it's exciting and volatile, or do you have other reasons for trading crude? You see, the E-mini S&P is probably the world's most popular market, or as far as stock indexes go. Excuse me. Had a little bit of a coughing fit there. I apologize. The E-mini S&P is probably the world's most popular market as far as stock indices go, and it trades at 12.50 a tick, so everybody thinks, oh goody, 12.50 a tick, I can make more money. But what people fail to realize is that if the, well, here, let me load up the E-mini and we'll see. If the E-mini makes a $200 move, the NASDAQ will probably make a corresponding $200 move, even though the NASDAQ only trades at $5. Now, this is not carved in stone. Sometimes the E-mini will move further, sometimes the NASDAQ will move further, but here's just a rough correlation. So we've got this signal out of the open, and so we're going to measure the signal now on the NQ. From the signal to the bottom of the bar, $290. Here's that same signal now on the E-mini. So there's the signal, and to the bottom of this bar, $290, right? So you're not earning more by trading the E-mini, even though the E-mini has a larger tick value. And you may find a similar situation with the Russell or the mid-cap. And yet the E-mini has other benefits. It allows you very often to take multiple contracts, or even to take trades that you may not have been able to afford on the, sorry, I'm trying to multitask here. Trades that you would have been able to afford on the E-mini. All right, I just want to get my trade to break even. There we go. Yeah, Tony says, yay, EMD. I like the mid-cap. I think the mid-cap's a great market. I really do. I used to follow it all the time. Makes some fantastic moves. Some of those markets, the other reason people gravitate toward markets like the Russell and the mid-cap is sometimes they don't get that little volatility that you'll see on the $5 instruments. The Dow tends to be a little calmer as well versus the NASDAQ here, which sometimes can be a little schizophrenic. Come on, get down there. See, it looks like I could have gone in with the full amount here again. Okay, if we can ride out this little swing, I think I'm going to go into parabolic mode. Maybe I'll cover above this bar anyhow. There we go. Lock in a little bit of extra profit, just in case the market makes a bounce here. Come on. Just give us that one more swing. Come on. Get down there. So once again, crude oil playing catch up now with what's going on, or trying to play catch up. So here's crude oil now on the hawk. You can see they made that little rally up and produced a macro pullback signal that was spoiled by the yellow bar. But you could also view this as a three-arrow consolidation, in which case the yellow bar is okay to short, but not quite the follow-through that we saw on the NQ here. When we had the trading room years ago, I never followed the NQ. I forget exactly what market I had my eye on at the time. But there was this little old lady in Florida who was in our trade room, and every day she'd be posting, Eric, you should be looking at the NASDAQ. I just made $300 in the NASDAQ. I made $500 in the NASDAQ. I made $1,000 in the NASDAQ. It's like, oh, all right. I better take a look at this. And because I'd seen the NASDAQ before, of course, and it kind of fell out of style, if you will. And yeah, she was having such great success with it. I thought, I've got to take another look at this market. And I think it's one of the underrated markets out there. Really, at $5 a tick, it's a bargain. And it does give you a lot of, darn it, a lot of flexibility as far as order placement. Or flexibility with your orders. All right, well, we weren't able to ride out that little itty bitty swing, but okay. Able to take a little extra profit out of the market, which is never a bad thing. Sorry, did I cough in your ear? All right, let's put that away. Well, welcome, Moses. Moses says, this is my first day in the room with you as a member. Well, happy to have you here, Moses, and don't be shy about asking questions if there's something you're confused about. That's what I'm here for. So what I'm looking for here is a possible four-arrow consolidation. We already have the macro pullback signal. With the macro pullback signal on the hawk, of course, we don't want to see too many of them because it shows, the market trying to move the other way and then recovering. So obviously, if the market's in a downtrend, we don't want it to be too bullish. And the seller's pushing hard. I'm just curious on that first micro-macro cross signal that we took out of the open. Had I gone with, say, something like an ATR strategy, would I still be in the trade? No. So regardless, the market would have looked back just a little bit too deep. Okay, now you notice how I mentioned the double pullback, or pardon me, the macro pullback. If they start occurring with too much frequency, there's a chance that the market may actually end up reversing. All right, so let's see whether we get a, there it is, there's a green bar sell now coming on the hawk. We're getting a possible trend change here in the falcon. And if you were inclined, you could treat this as an early soft edge buy. Actually, what I should do is we should only go in with a single on that. Now notice where the market is giving us this buy signal right near the low of opening range. It's essentially a retest of the low. Now, normally I tell you the test of the extreme looks like this, right? The market comes down, comes up, comes down, fails, and then rallies. Occasionally, however, the market will do one of these, where it comes down and the retest actually goes just a little bit deep. That's what it did right here. Fudged it by a couple of ticks, but there was no follow through, and now we've rallied back to this swing high. So what we've done is we've broken just a little bit, and now we're back here. This may turn out to be the test of the extreme if we break this high right here. Otherwise, there's a good chance the market will confirm a proper test of the extreme and give us one of those, and that's how you get your full inverted head and shoulders type pattern. But it's something to be aware of. Occasionally, while this is what happens 99% of the time and is by far the more predictable of the reversal patterns, bear in mind that when the market breaks an area of support and there's no follow through, rallies back to the last swing high, there is a chance that the market could be reversing, that this might be the test of the extreme. right, so here comes the test of the extreme. And we'll see whether, in fact, the buyers recover the market or if the sellers are going to knock them down again. See, note the conflict. We're getting a double pullback signal. So it's double pullback signal hasn't engaged yet, but this market working itself into a little bit of a corner. Okay, so the double pullback signal has engaged. All right, so far the seller's still in control. Yep, there they go. All right, so we can cancel that attempt at a reversal. Got a little bit ahead of myself, I guess. But we set up the trade so that it wasn't going to bring us in unless it was moving our direction after all. Guess I could have trusted that trend line a little bit more, that trend line intersection, and stayed with the trend, which is always a good idea. Okay, well, just kind of waiting out for the next signal. Crude oil terribly sideways at the moment. Here's crude oil on the Falcon. And you can see that they're pretty content just to keep moving sideways here. Working a possible trend change to the upside, but nothing going on at the moment. Way to go, Mark. Mark says, today's been a better day than yesterday. 3 trades, $300 total, all on the Falcon, all with just one contract, all in, all out. Stick a fork in me, I'm done. Way to go, Mark. Yeah, not a bad day at all. Steve's asking here about the trade manager. Once you set an order, Steve says, it'd be nice if you could change your order settings without having to. So we submit the order is pending. I'm going to clear this because it's not a real trade, but Steve says, it'd be nice if we could move that up and down, or do we have to clear it every time? You have to clear it every time, Steve, and that's because the risk percent would change depending on where your order is relative to your stop. That's why you can't change it just by grabbing it and sliding it. You need to clear it and rebuild it. I know it's a little bit of a pain. right, so here comes some buying support again. That was a very solid move lower. But we've got support again. All right, so we're back here. I suspect we may see a pullback into the hard edge. Well, things kind of slowing a little. Um, I'm thinking we're going to see another green bar sell. And like most of our signals, we don't want to see these signals produced too many times. This would be on the hawk, of course. So if we get another green bar sell here, it may hint that a bottom is actually forming. I have to admit the buyers are starting to look a little bit stronger, even though we've got a very strong downtrending session so far. Tony says unusual order flow in the soybean market right now. So soybeans on a steady progression lower this morning, pretty much right out of the open as well. Settling in on the secondary support line and now also going sideways and maybe even giving us a trend change to the upside. So things looking a little bit more bullish across the board, at least for the very, very short term. I don't think we're going to see a full-on reversal today in the NASDAQ. I don't think that's a reasonable expectation. The market is definitely in a downtrend. If you're in doubt, you should only look for shorting opportunities. But it is possible that we will see the market drift into a little bit of a sideways range here before the end of the day. Interesting. Tony says there was a huge sell side move on the Geiger counter with the soybean market. If it doesn't follow through, of course, Tony, then that suggests that the buyers absorbed all that selling pressure and that the market may well move higher. Could move higher. Which is kind of where I think the NASDAQ is at right now. We've got this yellow bar. Might be looking at a test of the low. Wow, Tony says it was the largest move he's seen in the soybean market. Well, we'll see whether or not there's any follow through from this now. Okay, so here's a green bar sell. Just the warning signal. We don't have the complete signal just yet. We do need to see the market trade a little bit lower. Again, here on the Raptor, you could consider this. No, I wouldn't. Sorry, I was going to say it's similar to what we were looking at before with the soft edge buy, but no, it's not. Put that right out of your head. All right, they're taking their time here, but we're going to close up the room here in a moment. But I suspect we're going to see a little bit of a retest of the low here. We might get a green bar sell signal. I might be more inclined to set up to buy it so that my trade looked more like this. I'd feel much better about buying it once we have the complete signal and a little bit more of a retest of the low. But that's how it's shaping up right now. So I think we could see a little bit of an uptick here from the buyers. All right, gang, just a reminder, tomorrow's room will be held at the open house venue. So if you don't have that link already, you can download it from the Indicator Warehouse website. Just go to indicatorwarehouse.com and click on free trade room. Enter your email address and you'll get notification to tomorrow's room. And until then, well, try to stay on the right side of the market. We'll talk to you in the morning. Bye for now.